Gold making all-time highs. It's the 34th of the year, all-time highs. You got BRICS, all the BRICS nations buying up gold, and that demand, it's not stopping. It's not going anywhere. They're buying it at a record pace, and I think that this is just beginning. It's broken through resistance levels. Of course, we're at all-time highs. It continues to march higher and higher and higher, and how high it goes, I don't know. I think bull markets go higher than anyone thinks possible. I think that it will be tied to a new system, but in the precious metals market, no question about it. And I want to. But, one of the things that I have thought a lot about over the years, Danny, is, I often talk about, is this stuff intended? Are we moving in a direction that could trigger a reset or a collapse? And if you look at so many of the things that we have done in this country, you have to wonder, I've talked about Jared Bernstein, the lead economic advisor to the U.S. government, being someone who wishes to lose the reserve status, is open about it, written reports about it. He thinks it's a privilege we can no longer afford due to the imbalances and distortions it creates. And of course, signing an executive order to go green, weaponizing the dollar, and having this type of attitude internationally certainly is a good start. Of course, what we've done here at home, we've talked about all of that. And this is kind of where this goes. And, let's look at the inner cities and these cities that are lawless, these cities that are changing in such a material way, largely because of the commercial real estate, where that lawlessness, that craziness, this mass immigration wave has, and of course, really setting the table was working from home, right? And people not working in the big office buildings anymore. All of the shops that were, and the restaurants and the bars that sprung up around all of the people working in these cities made quality of life fantastic. As fewer people go to the office, which is hurting the shops and the bars and the restaurants around it. These shops, bars, and restaurants close. You have a lessening of the tax revenue as less and less revenue is being generated. This is a doom loop because more people leave as the quality of life, whether it be whether it be less attentiveness with social services such as fire department, or responsiveness in the police, or garbage collection. All of this is a function of less revenue in a lot of these cities because people aren't there. They're pulling out, they're leaving. And if you have an apartment in one of these cities, you're like, man, this city's a ghost town, and it's scary, and all the, Whole Foods is leaving, and the hotels are closing down, and Macy's is closing. We're leaving. So they leave, which creates more and more of a sucking sound, which It's a doom loop, right? More people leave as the services get worse, which creates the services getting worse, which creates more people leaving. Well, the thing is that the majority of the small business loans, over 70% of them, are owned by the regional banks. And the majority of all the commercial real estate that all of these shop owners own are owned by the regional banks. If you're going to do this, if you're giving up on inflation, trying to pretend that you won the war, what you're really doing is waving the white flag. You were 65% off your target rate at 2% when you decided to lower rates, at a time when the stock market was at all-time highs and real estate was the most unaffordable it's ever been. So now you're going to reignite the engine of inflation? In essence, you've given up on fighting inflation and given into the economy, which is so debt-strapped. It's like a heroin addict, your best buddy, and you try to help him out, and you bring him into your house, and you watch him go through wicked convulsions, and you tie him down to the bed so he doesn't hurt himself, and he says, please, just give me some more, and please, and you can't take it anymore, so you give him another shot of heroin, and he feels great, and he's happy. Danny, thank you, brother, feels so much better, and then it all starts over again. And instead of fixing the problem, we've given more heroin to the system. We should have fixed it in 2008. When the balance sheet of the Fed was $800 billion instead of what it got to $9 trillion. And they sold some off, but it's still over 10 times higher than it was in 08. that was all heroin injections into the junky economy, and they're not learning their lessons. They're doing the same thing by lowering rates, but the world is getting wise to it, and that's why the back end sold off and rates went higher. We're not going to hold your 10-year duration. Are you out of your mind? If you're going to inflate, we need more interest. We need a greater incentive to hold your treasuries that are being inflated away. So I just think it's really important, and I wanted to lead with this because it's so underreported and yet so very important. And I think you see one major bank fail, like a big regional bank, or heaven forbid a bank like Bank of America. Is there coincidence that Warren sold $9 billion in Bank of America stock? Is it a coincidence that they've held the largest short position for the last 2 years in silver and gold? I don't know, maybe, I don't know. But all I'm saying is that this is far more important than the price of gold and silver, because this is everybody who has grown up since they were little kids putting nickels and dimes in a piggy bank, thinking that the bank is safe. It ain't safe. It's never been more unsafe. In October, on the 1st of October, the Basel III regulations went into effect here in the States, saying that the banks now need to maintain a 4.5% reserve requirement, after it was zero during the pandemic. Zero, meaning any money that you give to the bank, it's an unsecured loan. It's not a deposit. You're lending them the bank, no security to that other than the $250,000 FDIC guarantee, which they have 4 years to pay you back if need be. Not just the uninsured part, which you probably won't get in that environment, but read the Dodd-Frank Act, it will say up to 4 years to pay you for even insured deposits. So anyways, bottom line is that these are things that will affect everybody. And I think it's really important. People should check that out. Read the FDIC verbiage on this particular Bank of Lindsay, Oklahoma failing, and I think people might look at the world just a little bit differently today and tomorrow. Yeah, I mean, gold making all-time highs. It's the 34th of the year, all-time highs. You got BRICS, all the BRICS nations buying up gold, and that demand, it's not stopping. It's not going anywhere. They're buying at a record pace, and I think that this is just beginning. It's broken through resistance levels. Of course, we're at all-time highs. It continues to march higher and higher and higher, and how high it goes, I don't know. I think bull markets go higher than anyone thinks possible. I think that it will be tied to a new system, but in reality, what I think it is more than anything is a realization that central banks around the world do not have the appetite for our treasuries any longer that they once did. Not only are we proving to choose inflation instead of letting the underbrush burn, letting Mother Nature clear everything, we're meddling again and lowering rates and reigniting inflation. That's why the bond market sold off and rates on the 10-year have been going higher, because they understand this. But of course, as we've talked about incessantly and ad nauseum, it's the weaponization as well. Where we are, taking $5 billion in assets from Russia and buying weapons to give to the Ukraine. Our policies are making countries around the world want to own things like gold instead of owning our treasuries. Not only has it doubled the performance of the 10-year, has no counterparty risk. And you're right, you look at silver. And by the way, on COMEX, on the LBMA, London Bullion Metals Association, you're seeing roughly 2 times global market production traded every day in London. They have way less metal behind these trades. About 90% of these trades are paper trades, and if called on the carpet, it creates a very big problem. There's not even enough gold in the exchanges to come up with to deliver if need be, but more so in silver. Look at the numbers here. You mentioned that silver made a 12-year high. It's true. Closed up 6.5% on Friday. And what's going on with silver is ridiculous. You have 3.5 times global mine supply annually traded every day in London. There's 800 million ounces in the entire LBMA vaulting system, of which 500 million belong to the ETFs. That leaves 300 million ounces there that could be delivered. Well, they're trading 2.9 billion ounces a day, which is 3.5 times annual mine supply, 10 times what is available, 90% of which is paper. 8.1% of all of that silver was delivered in the month of August as these countries are standing for delivery. And you got analysts like Bank of America saying that gold will be 3,000 by next year. You have 3,100 by Goldman Sachs. You got Michael Hartnett from Bank of America saying that gold bull driven by policy and inflation. Investors simply need to hedge inflation and threat of U.S. dollar debasement. Gold heading well above 3,000. Yeah, I mean, I don't think we've even begun to see where this ultimately goes, but silver is the value of a generation. And I think the entities around the world understand this. You have China, as I mentioned on your show before, going around the world buying concentrate and doré bars directly from the Latin American refiners. They are paying way more than the West will pay for it. They bring it home and refine it themselves. It's not purchased off of an exchange, which has a material effect on the price they're paying and on how much they're really accumulating. They already are the second largest producer of silver in the world. They have become a net importer this year instead of net exporter. India, of course, bought between 800 and 900 million ounces over the last 3 years. That's more than is on the LBMA. And now Russia openly saying they're going to add to it as part of their state stockpile. Now, no countries have said that ever, really, to my knowledge, and now Russia is. So you have countries realizing the weakness to the system, or the way to beat the West is not through military engagement, but it's to stand for delivery, which is kind of the back door that no one ever utilized on COMEX and the LBMA. And you have 8 commercial banks on COMEX, Western banks, that hold the largest concentrated short position in any commodity ever traded on COMEX. And you have between 4 and 6 billion ounces short in silver by pretty much the same group on the LBMA. So if silver went up by $2 on Friday, that's between $8 and $12 billion loss to these banks. Now, I can't give you a definitive number how many ounces because it's an over-the-counter market in London. It's not an exchange where there is a central exchange authority that monitors everything. This is a over-the-counter handshake type of deal. It's more opaque. It's not as transparent, but we do know that roughly between 4 and 6 billion ounces short on London by these banks, and they're hemorrhaging. And how much longer can they take this acting in concert together in a collusive manner before they say, every man for himself, I'm out, bye, you deal with this, and they start to cover. And as covering happens, which is hard enough in and of itself because these contracts are 90% paper, what happens to the price? And it just goes up, which then snowballs the short covering price going much, much, much higher. And again, this is all because of creating this illusion that, holding the price of gold and silver down. And you can say it's because of the military industrial complex's need for silver. You can say they hold gold down to make the bond market and the Western system seem stronger than it is. Whatever the reason is, it is been discovered by China, Russia, India, Saudi Arabia. They're all exploiting the delivery feature option that no one ever did before, standing for delivery. And these entities, well, they got enough money to challenge the commercial banks.